the physical world is very different than the paper world, and obviously with the Fed printing as much as they are, and with central bankers around the world printing, we kind of view gold as just a different currency that you can't print any more of, and therefore it's much safer. But tell me your take between being paper and physical. How will buying physical metals get investors and get the general public to where they want to be faster than buying paper stocks in GLD or SLV, for example?
Well, in normal economic times, and what we're in right now is quite the opposite, but in normal economic times, precious metals are literally a store of wealth. They are a hedge against inflation, and they will always fluctuate, and they always move up and down. But in terms of growth, the real key is that the dollar and central banks and the money printing is so out of control that it's sliding backwards at a faster rate. Mm-hmm. So it doesn't cost any more for a tank of gas in terms of gold. It doesn't cost any more for a house in terms of gold in normal times. Sure. But because we're so out of whack with the norm, that's where precious metals really start to take off. So, the stock market, especially, just for an example, it's been so up and down and so volatile. We hit highs and we hit lows, and they seem like they're back to back. Well, that creates a lot of wealth for people that are really on top of that. But for regular people, 9 to 5, doctors, lawyers, dentists, people that have other things to think about, you don't have time to ride those waves, right? Yeah. So rather than sliding backwards with the dollar or with dollar-based assets, you diversify into something that's tangible, that's liquid.